So how do we draw those supply and demand zones? Well, today I'm going to share with you the exact process to make it much more simplified for you to draw those zones. And this is designed for beginners, but also people who have already been trading supply and demand for a while. So I've got on this chart, you see I've got some candles I've just drawn for you just to demonstrate to you this simple way to mark out and find your zones. Now this will show you an area of demand. Now the opposite would be same for an area of supply. Now, as you can see, I've actually made these candles all the same color. The reason being is because we don't really want to be looking at our supply and demand zones at the moment with those colors. I will show you exactly how you use the colors of the candles to find those zones, understand them as we go on to the actual price chart. But right now, let's just look at how we find those zones. Now, the easiest way for you to find the zones is to understand market structure. Now, if you're not sure about the use of market structure, I do suggest going through and watching this playlist, okay, on market structure within the channel. Go through all those videos. It's going to help you to understand everything to do with market structure. Then watch this full playlist as well on supply and demand, all going to help you. So for an area of structure, we need to see a previous swing high. So we can see we have a swing high here. This high was higher than this previous high and just above this previous high. So we can mark out here a area we can have as a break of structure. Just make sure that is lower. And this would be our breakout point. Let me just make this a dashed line. So this is where we'd be looking for the market to want to break to the upside. Now this candlestick here shows us the break of structure of this previous swing high. We have this current swing low, we pushed up, we pull back, we make a new higher low when we break to the upside. Now, once we see this breakout, this creates our area, okay, of demand. And then we look for the continuation to break again. Once we break out of this level, we create a new area of demand. So as we continue to break those structure points, we look for new demand to be created. So we have a swing low down here. We have a new high created, a higher low. We then break this structure to make a new higher high, and we pull back, we make this new higher low, and then we break out, and we currently have a new higher high forming. So we're going with the trend here. If I mark it out with an arrow, you'll see that we have a break to the upside, pull back, break higher, a pull back, and a break to the upside again. So we have a bullish bias, a bullish trend. And this is how we'd start to look to mark out our areas, okay, of demand. And the same when we're looking for areas of supply. Let's remove all those off. So we're marking on areas of supply and demand. Well, we're going to mark them off, and we just make this a daily zone. Okay, so when we mark out an area of demand, we're looking for the last bearish candle when we're drawing area of demand, or the last sell to buy move for area of demand. And we're looking for the last bullish candle or the last buy to sell move for an area of supply. On this example, we're just looking at area of demand, but don't worry, because I'll go through plenty of examples in the moment on the actual charts. So let's look at the last sell to buy move. Well, we can identify here, this is a bullish move up, okay, but this is a pullback. This is our last bearish candle, okay, in the sequence. We just do that again. So this is our last sell candle, okay, to the downside. We then push up here, okay. This is then a bullish move up, right? So we can see that we go from a bearish, okay, push down, and a bullish move up, which breaks structure. This means this is our last sell candle in this sequence, because this is a bullish move, bearish candle. Okay, so we mark off our area of demand from this bearish candle, where we look for price once we break out to pull back in, okay, looking for an entry to go long to take out this high again. Now, this is just showing you really a quick demonstration of what you'll be looking for. You're looking for that last sell to buy move to create the area of demand. And the opposite when we're looking to create an area of supply. This is the most simplest way for you to mark your zones on the chart. Okay, use this process and it's going to help you. So leave them on. Now again, when we break this structure, we have the same thing again. We have this is our bearish candle to downside. Let's just move that over. Okay, we then have this as another bearish candle. And then eventually we have this bullish candle to the upside. And let me just move that over. So you can see that the market pushes up, pushes down. I can do the same thing. I can show you this. The candle goes up. Mark that off. Just so it makes it like easy for you to see. So we have a drop down, push up. So last sell to buy move. Hey traders, we'll get back to the video in just a moment, but I wanted to give you a gift for hanging out with me today. I want to give you access to my Telegram community. This trading community will share my chart markups and give you access to my trading strategy. But it's more than just a community. You're going to have some actionable steps to accelerate your growth with hanging out with other like-minded traders, all looking to improve their trading. And it's free as my gift to you. So just hit the link above now to join the Telegram community. Now back to the video. Then we have the last sell to buy move. So understanding the last sell to buy move, we would have this as an area of demand again, the full demand. Now you can also refine these zones to the last actual bearish candle being this one. And very often you will see the market want to pull back into that last bearish candle and push away. Now this all depends if we have an area of imbalance sitting there. And if you're not sure about imbalances, don't worry, there is that full playlist. What's the market structure, the imbalance playlist, okay, they're all going to help. So right here, this is where we have a new demand. Again, this is our last sell to buy mode. So you could expect the market want to come into here, but we can also refine that zone. Right, so that's how we simply look at drawing out our zones. Now, again, the opposite would be the same, looking for the area of supply. Because we'd be looking for, instead of the last sell to buy move, we're looking for the last buy to sell move. Now, that will make much more sense when I do this on the chart. So what we're going to do now, we're going to go away from this, and we're then going to go to an actual price chart, and I'll show you how we do this on a price chart. So now we're on the actual price chart of the US dollar CAD. It is not one of the best pairs to do this on because it's a very ranging pair. If I actually went to the monthly time frame, you see how bad this is. So you can see that current price has been in a big sideways range for some time. Again, if we go down to weekly, even if we look at a weekly, and I just get my drawing tool, even the weekly has been in a very sideways market on its own. So finding good supply and demand zones is not always the best when we see in price like this, but if we was to quickly look at what happened here, the market did break this structure here to downside. Okay, what do you see? We see this is our last buy to sell move, okay, of supply, but we could refine that to the last bullish candle, okay, in sequence, and even to the last, okay, open place of that bullish candle. So you can see where price has just come in, tapped in and gone sideways. So there's an area of imbalance here needs to be filled. That's why I've marked it there. So we have an imbalance here that the market would want to fill. Now that does mean when the market comes into here, to see a reversal, really we want to see a reversal of this low here in the market to show me a continuation. But there is ways we can look for these reversals out of these areas. Okay, we can go down then to a lower time frame. But on the way down here, we're going to have this breaker structure. We do have very, very small actual breaker structure there as well, which creates this area of supply. And then we do have this breaker structure that we could draw. Okay, but this looks more like a swing, okay, than this little one here. And then we continue down, you can see we have more minor breaks of structure in here. And then we break structure here. And then you can see that we break out here. So when we see this break to the upside, we can look at the last sell to buy move. Now on this occasion is this move here to downside, and we drag it across. And if I zoom in, so you can actually see, because that was a bit small even for my eyes. So we can identify here, this is our last breakout area. We break out with that candle. Our last sell to buy move is this sequence here to downside. And then the market pushes out to the upside. That does mean that you need to be aware that this full zone could be an area where price can reverse out of. Now, if we actually refine that zone, we need to look for a reason to refine the zone. Now, we do have a leftover imbalance here, which means that I'll be happy to look to refine it to this candle. Thinking the market may push into this zone and perhaps fill this imbalance, because we also have a ready base rally zone here that I could draw at the same time. This zone here. Now, a rally-based rally zone is going to come up later in this playlist, so keep watching through these videos. They come up. You're going to have the rally-based rally, drop-based drop that you can learn within another video. So we can see that actually that is a zone what holds price. And then all we do is we continue to look for the market structure to break. So we break out here again. And the last sell to buy move of the current breakout is this move here. And our last bearish candle would be this candle right here. We have a leftover imbalance. That's why the market pushes down and then pushes away. Now, if we was looking at the actual origin move, this is my last sell to buy move. And you can see again that the market does break out and pulls back into this zone. And we've done the same thing. We've used a rally-based rally zone within this zone, again within this zone. Now, if we did refine it down, we will be refining it to this candle, and as you can see, the market's come back twice already to test that, so we're not expecting it to want to come back to that area once again. And even here we do have a small breakout of internal structure, and that's what holds price up here. Now, I know this is becoming quite complex. We've got a lot of zones on the chart, but what you need to understand here, we have internal structure here. We have a breakout here to the upside just, which leaves this area of demand, this last sell to buy move, where price comes back into and pushes away. Now, a lower time frame, that would be much more clear. So remove those zones for now. So again, look, you're just following that structure, another structure break. Okay, and again, this will be our last sell to buy move. Okay, on that move, and then we have this last sell to buy move. I would call that rally-based rally. And again, we could draw this out. You can see this where the market comes back into, we bounce back away. In fact, we do that on a couple of occasions here. But we have internal structure here again. We break out, leaving this area of demand, which we could draw out for the market to come back into. And you can see how the market will stack those areas of demand on top of each other. It shows you the bullish intent there. So currently price is bouncing off these demand zones, showing us it will continue to go higher. So for any reason to go lower, we really want to see the market run through this level to show us that reversal. Now that's on the actual structures we're seeing. So that's how quickly and easy you can identify, draw those zones. Now, if we go down to, let's say, a 4-hour time frame, and we look at the current price here on a 4-hour, forget what we just went through. If we're looking at current price on a 4-hour, we can see the larger swings here. So we can identify a breaker structure. Okay, a breaker structure here. We can quickly identify a bullish trend, a last sell to buy move. Okay, in fact, we do have a break of structure here as well, or is it just swept? It's just like I just may have broken out of that candle, and that would have left me a area I would draw of demand here. Okay, so this is more of an area of demand where we can see price pulling back in to fill this imbalance. We go deep in, we push back out and break structure again. Now this is in fact the last sell to buy move, is that small candle. Looks like it went smaller, went lower, sorry, on this. Yeah, so went low on this candle, makes that smaller zone. Price hasn't come back to that, so there's a fresh zone. There's a possibility we could come back into that. We also have an imbalance. So this imbalance here is what held price. We broke structure. My last sell to buy move is this area here. Okay, we can see that price is holding at that area of demand. So we're always going to find an area of demand price wants to come into. Okay, we break structure. This is my low of the move. This is my area of demand. We actually remove that demand. So we also have on the way up here internal structure, more areas of demand. So we have the last area here, demand. We have rally-based rally demand there as well. But at this point, we now know that on a structure base, we broke structure to the upside, we broke it back to downside. That means from this high, okay, this last buy to sell move here in the market, I think we are just high. Yeah, we're just higher there. And we could refine that to the last bullish candle. The reason being, we have this big area of imbalance to be filled. So what we can look for here now is the market wants to come up into this area of supply for another sell. Now, the reason for this is because this is the origin of the high what broke this structure low. We have a leftover imbalance within this candle. And again, like I said, go through that playlist on imbalances. You'll understand what imbalances are. We could see the market want to pull in and drop back away. That is understanding structures here, going with the structure. Okay, we broke structure here just with that candle. We swept through the low as well, overhead to left, and we're slowly pulling back against this move to downside. This could be, okay, the start of the reversal, and that's coming out of an area here of supply. Perhaps potentially, let's get my crosshairs. So yeah, we could have an area of supply here on a 4-hour. Our last buy to sell move is here, where price is reversing out of. Now I go closer in, you can refine that to the last bullish candle if we have an area to, of imbalance to look for. But my area of imbalance is in fact down here. So on this occasion, I probably would leave it off this zone because this is the area of imbalance. Now you could refine it off this candle like this. Okay, there's the whole zone, whichever you wish. There's the area of imbalance left over. And that's where you look for price to come back into. And eventually we push in. That's where we see the market push in deeper once again to area of supply. Now we could go higher yet and push through this full zone to the left, but we're currently looking at the zone which is created here on the push down, breaking this structure. Now how do we look for the reversal out? That's where we go down, we understand the confirmation entry, and there will be a video within this playlist as well going through how you look at that. But that's how you would simplify looking for your zones. Okay, we're just looking for that breaker structure to use that origin zone. And if you wasn't sure how to mark them up, go back to the beginning of this video once again and just look at how I used those candlesticks to mark out that area of demand. And again, we'll just flip that over to do your area of supply. Very, very simple. Do your supply. If I go over here, we look for the area to be broken of structure. Let's say we're using this as an area to be broken. Okay, there's a move down. Area of supply would be this last buy to sell move, basically meaning these last bullish candles to the move to downside. Okay, that's my area of supply. Now the market never came back and we continue to break structure. We then broke structure here again. Now on this time we have the last buy to sell move here as an area of supply. And that's the area of supply at held price. And again, that we could look at refining the zone. Now, if I was to refine this area of supply, I'd be looking for, we have an area of imbalance left over here. Okay, so I'd probably be looking to refine it to this move on these wicks. The market comes down, we just push in, okay, and we push lower. That's how I look at refining that zone. And again, we then have another break structure to the downside, leaving a new area of supply. This will be our last buy to sell move. We can drag that across. Let's bring this one back. Okay, so you can see the market pushes down. Do we have an area of imbalance? We have a very small area of imbalance there. So again, I would bring it up to this candle as my area to refine the area. You can see the market comes in, we push in, we sweep above this high, and we push down. That's the quickest way for you to mark out your areas of supply and demand. So you trade supply and demand, but you struggle to find those best zones. You tend to find the zones you mark, you end up having losing trades. So let's go through that today and let me help you to find those best supply and demand zones to trade from. So on the Euro-USD pair on a daily time frame, first let's go through the structure of understanding how to find those best zones to look to trade from. So let's say we're in a bullish market. We're seeing the market coming down. Okay, we create a reversal and we're making a bullish market to the upside. When we're looking for those best zones to be trading from, we're looking for the origin. Okay, so the origin move where we see the low point where the market continues higher. They are always going to be the best zones to trade from. They are the zones you want to be marking on your charts. Now, I will show you what I mean when we go to the live price chart, but we're looking for the last sell to buy move for the area of demand, or the last buy to sell move for the area of supply. It's as simple as that. And once you find these zones, they're going to be the most highest probability areas to trade from. They're going to be the highest area within that swing pullback where you want to be taking a trade. So understanding this information, this would be your swing pullback, okay? Let's bring this one down, new area of demand. Again, here, this would have been your swing pullback. Let's mark it out as well. And okay, so let's say it's the area of demand. So this is how the demand sequence would work. And you would see the market creating higher lows, in areas of demand, breaking structure each time. Now you're going to see this much easier on a price chart, but that is the basic form when looking for the best zones to trade from. Let's remove all that. So let's go to a price chart, and we'll start from here, going to current price, so you can see exactly how we look at marking the zones. Now there's two ways we can look at marking zones. One is that swing structure, and the other one is our internal structure of that swing. Let's first look at the swing structure, how we look at marking the zones. So let's say we have the market creating this last push here to the upside. Okay, now you can see where we have this break of structure here. Okay, I'm going to leave this here for now. Where is the best place to mark the area of demand? Now we just went through that structure, okay, to show you the best place to mark out these areas of demand. This would be your last sell to buy move. So this would be my area of demand that I would draw out. Okay, that's the zone that you want to have on your chart. The last sell to buy. Okay. Now, if this was a bearish candle here as well, this would be the full zone. Now, I'm not saying you're going to mark that on your chart, but you're going to have it at the back of your mind that if price comes here, okay, we could see a reversal out, understanding the internal structure of that swing. But this is in fact our last area of a sell to buy move. So that is our origin area of demand. So let's now just go back. Okay. Now you can see price does come into that zone. Now I know this is in hindsight, but this is the best way for you to understand how to apply this. So let's now go back and look at this full swing. We have the market pulling back. We push back up again, break structure, pull back, and we break structure again, and eventually we actually reverse. So once again, let's go closer into the market. When we see this breakout here to the upside, where is your last sell to buy? Well, here's your last sell to buy move. That became your area of demand. You can see price comes in, okay, and reverses out. Once again, we see this push up from this origin move, okay, where's your last sell to buy? Well, this is our last low in the market, okay, like we have this low here. This is my last sell to buy move. Now we in fact have a reversal here that you're most probably going to find a good entry in a lower time frame, and you could have caught all that move up. But understanding this is the origin zone, we see the market comes down, we have a bounce, and then we have a straight close through. Now you're going to find that you will lose every time the market makes a full reversal. There's just no way of knowing for sure that this area is going to hold. We expect it to hold, and there's no reason you can't be trading this on the way down the lower time frames for profit within that swing. But when we come here, the likelihood the market's going to reverse and go back up is much more higher probability off this higher time frame than would be if we was trading, let's say, a 1 hour time frame trend here to the downside. The 1 hour is not going to remove the daily area. Just remember that. So that's how you'll be looking at those areas here to the upside. Now let's look at these last two swings. Okay, we have an area here of demand. This price held and we push back up. We have another area here of demand as well. Okay, and the market pushed straight through. Again, it's a reversal and we have internal structure here. But my point is, if you was looking at trading this, you would not want to be trading off these zones, because these are not the best zones to be trading from. The origin is the best zone. Always have in the back of your mind that where's the swing formed? Okay, this is where the swing formed. This is where the move went up. Again, here, this is where the swing formed. If you're looking to mark off all of these moves here as areas to look to trade here from, that is not going to work, and you're going to have losing trades after losing trade. Stick with the one zone on that time frame. Forget all these, okay, to trade from when you see the pullback, especially once we've broken through those highs. On the way up, okay, yeah, on the way up, we can look to trade these zones. Continuation until we remove that high. That's fine. But when you see this pullback here, we're not trading off this zone here. Okay, we're trading off this one only. Just keep that in mind. So that's how we look at this swing structure, okay? So let's now actually take a look at this area of price. But before we do that, for the internal structure side, let me just do a sketch for you first. So let's say we have the market now in a bullish trend, and we come back down into this area of demand, and we see the market doing this. This is then where we can see the internal structure, okay, heading back up to eventually remove this high. That's what we're potentially looking for. So we have our higher time frame area of demand here. And then we break structure back to the upside. You're looking for your origin zones. Again, just like we saw in the swing pullback, you're looking for those internal swing pullbacks. Continue with the areas of demand. And again, you're looking for the last sell to buy move on each of those areas. That is all we're seeing here at the moment. Now, the only difference is this isn't coming off a bullish area of demand. It's just a retracement. You can still trade these the same way, but it's going to be much, much more risky unless you understand what the market is actually doing. So right here, let's look at this. Let's remove this. I'm just going to draw in the actual areas of demand so you can see this with demand and supply. So our last area of supply is here. Our supply gets removed. We have, okay, this is actually our last sell, okay, there. Our last sell to buy move, but we refine that to that last area down here. And we can see the market, once we broke this supply, we came back to demand. Now, whenever we see these sort of reversals, we want to be looking for the next structure edit. So where we see again the sell, okay, to buy move, we come back in this demand zone. We're going to refine that once again now to here. But what you need to remember is that the market could reverse off this area. And what is that actually going to be? That would be our area of a previous era of resistance structure in the market coming back to act as an area of support. When we pull back into this area of demand again, okay, we have another break of structure. Our last sell to buy move is in fact this full move here. And that's why we see the market coming back and will react and continue high. Now, if we refine that, it would be here. But you have to have in the back of your mind a previous era of resistance could become support, which is a structure shift reversal. That's why we look at the last sell to buy move of an era of supply and demand. Again, our last area here is this move here, our last sell to buy move. And again, we can do the same thing, our last area of here. Again, I'm going to mark it off from the low. I'm not actually going to mark it like this, I'm going to mark it off from the low. And again, this would be your full area, last down move. So again, you could look at this as a previous structure break, retest continuation. Now, again, we'd always look to refine it, because really we want to be looking for a trade to come off this zone here. So the deeper the pullback, the better, all depending on the size of the swing as well. But just bear in mind that these levels can have price react at them. So that is how you look at that reversal. That's just what we went through on that diagram. So if we were looking at like as a structure point of view, this is your structure. And this is how quickly you can identify structure in the market. You don't need to make this complicated, okay? Use this simple structure technique I'm showing you in this video with those best supply and demand zones to trade from, and you will do absolutely fine. Now, if you're struggling with your supply and demand trading, you're taking loss after loss, you're finding that every time you enter an area of supply, the price just smashes through and you have another losing trade. And don't worry, because I'm going to go through the 3 types of institutional supply and demand zones that you need to know and add these into your trading. Now, the 3 types we're going to look at is the range zone area of supply and demand, the pivot zone of supply and demand, and the fractal zone of supply and demand. Now, what I recommend straight away is that you stick with the pivot zone. We'll go over that in a moment. Let's start off with the range zone. Now, a range zone of supply or demand will be created by a cluster of candlesticks. That's where we call this the range zone. And we're going to see price dropping out of that zone, leaving us an area of supply, or we're going to see that rally out, leaving us that area, okay, of demand. Now, we want to see a strong close out of that range. That's going to identify to us it's a good area of supply or demand to trade from. Now, these ranges are going to most likely show on a higher time frame the pivot zone, and that's where the pivot zone comes from. Now, the pivot zone is where we're going to see those last buy to sell candles. Okay, when we're looking for an area of supply, it's going to be a buy to sell move. And we're looking at the area of demand, it's going to be a sell to buy move. So what that means is when we're drawing out our areas of supply, we look to draw off the last bullish candle, which creates that buy to sell move. And we're looking to draw that area of demand, look at that last sell candle, which creates that sell to buy move. Now, this isn't something that I use specifically because what I'm really looking for is that pivot reversal where we see the close to the upside for an area of demand, closing through that high of that last either two candles or the single candle that creates that pivot move. We want to see a close of the previous high of the bearish candle to be confirmed as a good pivot zone to trade from. Again, we want to see a close below the low of the bullish candle to confirm our area of supply. So that's how we look at the pivot zone. Like I said, it's the recommended zone that I suggest that you apply when looking to trade off an area of supply and demand. And the last type that we look at is what we call the fractal zone. Now, the fractal zone will be coming off the wick in the market. Now, very often this will show us the smaller time frame of a range or a pivot zone. Now, when you're trading a fractal zone, very likely you're not always going to get entered into that trade. And what I suggest is that you stick with one of these three types of zones and you trade them and nothing else. Don't jump between the range, the pivot, and the fractal. Stick with one. And that's going to help you with consistency. So the fractal zone, what we can expect from this is that we're seeing that range or that pivot zone forming, okay, on the lower time frame, and that's going to show us the wick, okay, on the higher time frame. As we can see here, we see the wick is formed, and we see the markets pull back up into that wick, and we see the drop away. Now, when we look down to the lower time frame here, we can see this created an area of a range zone with a drop out, and that's how we can look at using the fractal zone when we're looking to take those trades. So what do I suggest doing? I suggest using just the range and the pivot zones. They're going to be the best types of zones for you to use and trade in the markets with supply and demand. Now, if you want to increase your learning, then I suggest checking out the absolutely free Telegram channel right now, which goes through daily updates on exactly how I'm marking out those charts on the EURUSD pair. And it's going to help you to identify the exact way I'm looking to mark out my supply and demand zones when you're using these three types of institutional supply and demand zones. Now, many of you do not trade with an institutional supply and demand trading concept, but I want to share with you today how this can create potential profitable trades for you in your trading. I'm also going to go through and show you how I shared this trade setup ahead of time within my trading community. So the trade was on the pound US dollar pair on a 15-minute time frame. I've actually marked it. Okay, so the trade was right here in the market. This is where I looked at taking that trade. Now you can see that the market has completely just exploded up since taking this trade. Now I only took about just under 9-to-1 risk to reward on this trade. Yes, I could have got a lot more of that trade, but it's not about looking for those high risk reward trades. It's about getting good quality trades with good quality profits. So let's go through and dive deeper in this video how we can use an institutional supply and demand trading concept to take good quality trades like this. And we're going to start by going through the top-down analysis. I'm going to do the replay mode from this era, and then we can go through price. So let's go to the daily time frame, and let's just mark this up. So first off, we can identify that the market at this point on the daily, we were going up. Let's just remove this line now. Excuse me, let's move that line. So we were heading up. Okay, this is current daily time frame. Okay, this is the current daily candle, should I say, with that 15-minute reversals coming in. So at this point, what I'm doing is I'm looking for the market to want to run this high. Now, this wouldn't have actually happened yet. And the reason for this is because of the fact, just mark this off and everything, we still be down here somewhere on this 15-minute setup. It's just because this replay mode shows you it's slightly different. I'm then looking for a final target of this higher pair. So I have a couple targets in mind, okay? Just this is my top-down analysis. Now what I'm seeing is the market here. And again, if you want to learn more on market structure, okay, this is about supply and demand in these videos. there is a whole playlist on market structure. Starts off going through the mapping of market structure, which is great for you to understand what we're sharing. So we can see the market break structure here to the upside. We pull back and we break up once again here. We then break structure head to the downside. And then what we expect after we break the structure is a pullback, okay? Coming back into this origin area here of supply. And that's what the market is currently doing. It's pulling back. If you look closely at what's happening here in an internal structure on lower time frames, we can see the market's making this break structure to the upside. Okay, so we have to wait for that to reverse before we can look for any sells. And it can also mean we could see this high run through as we go deeper into areas here of supply. So there'll be an area of supply we're looking at here in the market. So we go with the order flow of price in those lower time frames until we see that reversal. At this point, I'm looking for potential buys with the lower time frames, thinking ahead that we could see a reversal with this daily time frame. Now, the reason is, if we look at the bigger picture here, understanding the larger view, we actually broke structure here to downside. Okay, and we also broke this structure here. So we had this break to downside, and what we've got this full push down and a swing pullback, and we're seeing this reversal out, okay, of this swing pullback, and we're looking for pullback continuation down to take out this weak low. Again, all of this you'll find and understand more inside market structure. So I am looking for a sell potentially on this pair still to the downside at this point, but I'm going with the lower time frames to look for those buys. So we go down to a 4-hour time frame here. In fact, let me just mark out a potential area we could see. This is my last sell to buy move that I can mark off here. Daily zone, so we can see the market's breaking to the upside. Just go to the 4-hour time frame, and the 4-hour time frame will confirm this, where we can see the market. Let's just get my drawing brush, so we can see the market here broke structure. Okay, we then create this as our low in the market, where we just swept it with this big bullish candlestick. As soon as I've seen this, understanding the liquidity in the market has been run through this low, okay, into this area of demand below here on this move up, this candlestick shows me instantly that we will run this high right here because we closed through what I class as an area of imbalance. So an area of imbalance left over here, which was removed. Let's mark that to the back. So this was closed through on this candlestick after we, in fact, swept the low here, and we swept this low here to the left. This puts me onto a bullish bias, and I know the market will run this high. So we continue up, we push through that high, and we failed to take out this swing high. This is the swing high where I want to see the continuation. So we have the market creating this move, and I expect the market to run this high with a good 80% accuracy that I expect to run this high. As it didn't happen, we create this swing pullback. Let's go closer into price now. I'm looking at the market as we continue up. Okay, we have a very balanced market here. What I mean by balanced market, we don't have any leftover imbalances. Okay, they have all been absorbed. Okay, this had an area of imbalance. Originally, we pushed in on this candle, we pushed away. We had a pre-imbalance. Okay, not sure on imbalances. Again, there is a full playlist in this channel. Okay, go through to that playlist on the homepage on imbalances. Watch every video in that playlist is going to help you understand the imbalances. We had a pre-imbalance here. Okay, and this one held price. Let's mark this out. Understanding pre-imbalance is really crucial to understand what's going on. So we had this pre-imbalance, and the market pushed through this low of this imbalance right here, which is again a pre-imbalance originally. The market then left over the small imbalance here was left over. Now that imbalance held price. Let me just make sure that is to the back out the way. So that imbalance held price there as we pushed through into the lower imbalance. So we've just come back to the 50% of this pre-imbalance once again and held this imbalance. That indicated straight away that we could head higher to take out this high and run this high that we haven't yet taken. Okay, like I said, Understanding everything in the market with the imbalances, your swing highs and lows, where the liquidity sits. There is going to be a new playlist coming on liquidity as well. Everything with market structure, imbalances, and supply and demand. This is how you become a profitable trader. This is what I'm sharing in this channel. Hey, how you can do all this. So at this point, I'm now very bullish. I'm thinking, okay, we'll need to be looking for potential buys here. That's why I go down to my 15-minute time frame. I'm now looking at a potential reversal. Why? Because if we now start looking at the structures on this time frame, we can identify this move down. Okay, so when we start seeing this big push to downside, this reversal back out, look at the V-shaped pattern there. That is showing me a sweep in the market. That shows me bullish momentum. Not many people look at the candles in this way. Now, once we start moving higher here, I can start marking out my areas of 15-minute demand as we continue higher. Okay, so I'll show you how we do this. So we have a 15-minute zone here as I continue to break structures. Okay, so I break structure here, we broke structure here. Again, you can learn more on the structures inside that other playlist. And again, we break structure, we continue up. Okay, so we have another zone here and a final zone. Okay, so we had this zone breaking up, and this one broke out as well. So I could mark this out as a full zone. And then a final zone we broke out here. This would be my zone. So we have a zone very well nested inside this zone. So we continue to break up and we hold demand. So now we've come back into this demand zone. The same area I'm looking at, the area of imbalance, okay, on the 4-hour time frame. And I still want to see this high get run. We front run this level. We never front run these levels. You're always going to find them get run on these swing highs. So now what I can see is the market is showing me a break to the upside. I'll start marking out my structure here. We broke here to the upside, but the main structure break here would have been this high. The reason for it is because we broke out of this low, head to downside, and we reversed it there. So this is the move down, the move up. We never broke lower again from this swing high, so we don't use that swing high. As soon as I see this, I can mark this out. Okay, this is my low here. So I can mark this out as an area of demand. Now, this is I think this is the spread betting pepperstone, where I think I normally do my analysis on the standard one, but we'll see if price comes back to this zone. It may have been off this candle. I had it marked, I believe, because actually I think this is the low. So yes, it would have been from this area here. That would have been my zone I marked at the time, because this is my last sell to buy move. This did not go lower, I don't believe, on the other platform, but that was my zone I had. So my targets, okay, my target is going to be, first off, shrink chart out to take out this high. That's my first potential area I expect price to go. After that, I'm expecting price to go for this high, which is that daily swing high we saw to the left. We went through the daily. So let's go forward with price here. In fact, let me just let's just stop that a minute. I think it has stopped. So what we need to do first is just place that trade to show you. So this would have been the entry. This would have been stop loss. This is my first target. That's what we're looking for to start with. Okay, that's my first target. So let's just forward this again. Okay, so see we get triggered in. Okay, so we're quite deep here, and then the market takes off. This was that trade, and you can see we pushed through quite strongly with this candlestick. What does that show me? That shows me a large momentum push through here. It shows me that we're going to continue higher. So that's my first profit target taken, just under 3 to 1 risk to reward. And again, the second was up here, which was, I believe it was a bit more than this. It was just over 8 to 1, nearly 9 to 1 risk to reward. We'll see this in a moment. So as we can see, the market here left this big candlestick. Okay, this leaves an area here of demand again. Also a nice big area of imbalance where we can see the market continue off this level and this area of imbalance to the upside. See if we get this. So the market pushes down into demand. And we're looking for that reversal out. And we've just taken out this demand, I believe now. We've just swept the low, okay? So we should see a bullish move up from here. At this point, I'm already in the trade. I'm not looking to add to my position at the moment. to see if we can break this high. This is then going to be a break of structure. So we're looking to break this high here to the upside. This swing high is now being broken. So now I'm expecting continuation for this level. Now at this point, I believe, we just pause this. I decided to exit some of this position. I believe this was in the morning. I came to the charts. We just failed to hit this level and we started pulling back and I took some off the trade. Okay, so I've taken some more profits, basically partially taking the profits. This is my first profit target here. I've then taken some more at this level. And I'm still holding for this as my final target at this point because I don't want to see the market pulling all the way back down to my break-even level now, stop me out, and I potentially have a stopped out here as a break-even trade, and then we continue back up that level. We don't want to do that. So we want to take those partials along the way. I believe there's a news come out in the moment, maybe the non-farm payroll. I'm not quite sure when it was, and you'll see we had a big push up. I think it was news before. I think it was the Thursday. We should see a push up now to take out this level, which is that swing highlight. We need momentum to push through that level. So we got a nice momentum push through. Okay, so you can see the market is pushed through and we continue higher. So that final target was hit. That was the trade, how I used the supply and demand institutional trading concept. Very, very simple. Okay, we're coming off higher time frame area of demand. We saw we were coming out of that 4-hour area of imbalance and we were following the order flow here of the 15-minute demand. And that's all I have to do. We wait for that reversal. There was the entry, take profit one, this previous swing high on the lower time frame structure, then the daily swing high up here was taken. And that is how I look at trading with a supply and demand concept. Let's have a quick look now at the Discord room where I shared this trade. So you can see this is my actual NFXT service, and this is where I go through what we're seeing on potential charts. I was actually looking for a deeper pullback on that day to this area below for another buy. And then as the day progressed, I actually saw this reversal happening in real time. You can see I shared where my actual entry is going to be looking to come from, where we're looking for market to go to, expect that move higher, pullback continuation. That was what I was looking for. And then we have the entry, you can see, into that area, targeting that swing high first. You can see it's just over, just under 3-to-1 risk to reward on that first target. And then we continue up, we push through, okay? That was the first target hit. That placed me into risk-free trade on that entry. You can see this is all posted. If it's going to the winning trade section, you'll see the final trade on this pound. That was the first target, okay? That's where I took off some profit, okay? I'd say on the partials, we saw the market pulling back, and then the final profit target was hit. So that is where I share that inside the community. And that's how simple it is to look at using the supply and demand trading concept. I do suggest going through watching this video a few times. You really get to the grasp of how I look at the charts. And again, like I said, going through this video, you need to go away and also watch those other playlists on market structure, imbalances in the market. They're going to help you understand those concepts even more and what I was talking about more in this video. Supply and demand versus support and resistance. Now, it doesn't matter whether you are a supply and demand trader, a support resistance trader, this video is going to help you to understand the concepts of how you can combine the two together, or you can go down the route that I suggest, which is a supply and demand trader. So I want to go through and show you the concepts in a moment on a price chart, but first let's do some sketches so you understand the difference between the two. So majority of the time, let's look at an area for people looking for a buy. We'd have a move in the market, pull back, a break of structure here, continuation, and a pullback. Now, what people are looking for as a support resistance trader, they're looking for this previous high to act as a broken resistance, to act as an area of support. They look for continuation higher. Now, this comes into understanding market structure. Now, if you're not sure about market structure, then what I suggest doing is going through to the actual playlist in the channel of market structure. It goes through step by step on how to read market structure with mapping, using internal structure. Now that's on the channel. Once you watch this video, you're welcome to go and watch that playlist. So understanding a break of structure here to the upside, okay, we make a new higher high from this higher low, we pull back, and what support and resistance trades are looking for here is this area to hold. Now they'll be looking for a price action signal with a candlestick pattern or a reversal out of some sort to look for a buy to then continue up to break structure again. Now that's perfectly fine and it works for a lot of people, but there's a reason why this is working, and it's not because it's acting as a support resistance, and I'll explain why in this video. So keep watching to learn more about it. So let's now discuss why this really happens. Okay, so if you're a supply and demand trader, what you're actually looking for here is where we see the market breaking the structure, we're going to leave here an area of demand in the market. Now this area of demand is where we're going to find those orders left over, and that's where you'll be looking for the origin zone of demand for the market to pull back into for that buy to continue higher to break structure. And this is the absolute best entry area to take a trade. One, it's going to give you much better risk to rewards on the trade, and it's going to give you higher odds of taking a profitable trade, because very often we can see manipulation after manipulation here at this previous test of this previous high. Now there is sometimes we can find that the market will hold at this level, and I'll go through that in a moment why. But if you are a supply and demand trader, you'll understand the concepts here, why we should be looking to take a trade here. Now you may not understand why you could look to take a trade here. So if you're not sure on this concept, make sure you continue to watch to understand how this can help you in your supply and demand trading. Now, many support and resistance traders will find that this will give them an entry and they will continue up and be profitable. But another time it comes back to this area, it smashes straight through, comes back to demand, and then it continues up. And that's where they get frustrated and where they will end up revenge trading and losing more trades. So why does this work? Well, let's just remove these off the chart. So the reason this can work is, one, what we can see is as the market continues up here, we can create what we class as a rally base rally move, which creates an area of demand. Okay, so we can have also to the downside we class as a drop base drop move, which creates an area here of supply. Now if you want to learn more on those in much more detail, keep watching the next video coming up, because it's going to go through into the rally base rally drop base drop. But this is just a quick understanding. This is why you can find people are capturing trades off these areas, because we can create that area of demand, that rally base rally here as we break structure. Now very often this can actually happen because the markets are just coming up to this level, manipulating people into thinking the market's going to sell off, and then they push up and break structure. Very often this will happen. People will get caught on the wrong side of the market as the market does this, and this is what creates those orders left over in this area of demand. As we pull back, people who want to get out because they're having that pain of being in a losing trade if they don't have a stop loss. Now, if you're not trading without a stop loss, that is absolute suicide. Please trade with a stop loss. So that's one way we can have that rally base rally. Another way we can have here is what I class as the area of imbalance. So let's remove this again. On this move up here, we can have the imbalance zone. Again, this is a concept that goes into much more detail inside the imbalance playlist on the channel. On the home page, go through to that playlist and that market structure one. Watch all those videos in the playlist. It will help you massively in your trading. So we can have here an area of imbalance. Now this area of imbalance will have blocks of orders left over, okay, in there if you're going to take a trade. And I'm talking about those city order blocks, all that stuff. I'm talking about blocks of actual orders that remain within the imbalance zone. This is where the market will come back into that imbalance zone and then pick up those orders to push higher. Now, inside that playlist, it will explain much more detail. I don't want to go into too much detail today because we really want to talk about the difference between supply and demand and support and resistance. So that's why sometimes you can find those support and resistance traders will find good trades here based on that rally base rally, the area of imbalance. Now, to the downside, you'll have that drop base drop or that area of imbalance as well. And obviously you have the area of supply. Now, majority of the time, you're going to find that the market will come back, okay, to these areas of demand. And that's going to give you the best trade, okay? And that's where you want to be looking for as a supply and demand trader. But you also need to take note here, because what can happen is they will bring price back to these areas of imbalance, manipulate those areas in the imbalance or just above into the imbalance, where people are going to look to take trades at this as a support resistance entry. And that's where they also lose being manipulated out of the market. Now, I'll talk about the liquidity a bit later on as well. So if you want to learn more on liquidity with this, keep watching. So let's now go into this one more time, look at one more thing. We can look for an entry here, and that is we can also see this happen in the market. We can see the market break down, we push up, we break structure. Okay, we pull back, we come up, we just break structure again here to the upside. Okay, and then we pull back and then we continue on its way. So what I just want to do is we'll just bring this height down so it looks better. So we're looking more like this. Okay, so what we can identify is that we break structure here to the upside. The market then pushes up and only just breaks out here to the upside. And what it's doing is coming back to this area of demand, okay, before we then continue up again to break structure. Now this happens over and over again in the markets. Now this is where you're going to find, okay, if I drag this across, where support and resistance traders are believing we're seeing a double test. Okay, we're coming back to support again, support's holding again. That's not what's happening. Again, here we could see a rally-based rally, or we could just see an area, okay, of imbalance. Now we could even see here the market may not even come back to demand, may push through this previous low deeper into the imbalance. Okay, and this is where we can create that area of liquidity. So we can either have an area of demand here which holds and we push price higher after this small breakout, coming back to this previous swing high where we had a previous area of a rally-based rally or an area of imbalance. And then that's where the support and resistance trade is going to see this as a potential buy. Or we could not have that and we could have price pushing through, okay, the previous low after coming back to retest this high into the imbalance here. We have a leftover imbalance. We wick through this low. That is liquidity in the market. We're pushing through a previous low. Previous swing low creates liquidity. We then fully fill this imbalance, and then we see the push away to break structure again. That's another way support and resistance traders can look at the market, not realizing what's really going on. Hopefully you begin to see the concept of why supply and demand trading is much more profitable and will help you to read the market. Okay, support and resistance will not help you to read it. The use of imbalances, supply and demand, market structure, that is the way forward for you. So let's have a look at price now. And we'll go through these concepts on the price chart. Let's work our way from where we see the move down, the move back up. And then we'll look at a lower time frame as well to apply these concepts. Let's zoom in to price as well. Remember what we just went through. We're going to apply this now. So let's see, this is a breakout of structure, okay? And look what happens. The market breaks structure, pulls back to retest, okay? Breaks support, retests as resistance. We have a bearish engulfing candlestick, and then we continue to break structure back to downside again. Now, even as a candlestick entry, that is not a good trade. Why? Because we're selling into structure. As a support resistance trader that I used to trade, okay, before I went into supply and demand, this would be a no trade zone because we're selling into support. Okay, we have no room to move. If this was down here somewhere to sell, we had space, we had room to sell into. Okay, so understand that even if you're a support resistance trader, take this information away and it will help you. Now, if you do want to learn more on support resistance, how I used to trade with those candlesticks, then there is a free ebook, okay, that you can sign up to and you can grab that as well today. So this concept here of a break of structure, retest resistance is not why the market's pushed lower. The reason it happens is, if I zoom in, hopefully you can already see this. It is an area, okay, of a supply zone and an imbalance zone. Let's draw the imbalance zone first. We have an imbalance here left over. I can draw this out, this area of imbalance. So you can see we break through and this candlestick leaves the imbalance. And again, you'll learn much more on imbalances if you go through that playlist. We pull back into the imbalance, we test to 50%, we do a full fill, then we push the market away. Now, at the same time, we also have our last buy, okay, to sell move here of we class as supply. Now, if we just mark it out as a weekly zone, but we didn't quite come back to test that supply. Very close to it. And if we were to refine this zone, I would normally look at this as my actual supply zone anyway. But this is a last buy to sell move. And again, that would have been the video they went through understanding institutional supply and demand zones. We look at the last buy to sell move. So this occasion, it's the area of imbalance was held price and we've pushed price lower. So understanding this, we'll go down to lower time frames. We can look for entry here, this area of imbalance. We can use market structure for a structure shift on a lower time frame. We can capture an entry down to this low. So even though we're seeing this candlestick, we would have taken entry on a low time frame way before this candlestick actually closed. That's understanding the use of structure in the market. This is not, okay, a break of structure, a retest of resistance. This is a retest of orders left over here inside the imbalance zone. So again, let's continue down. We then break structure here once again. Okay, continue down. So we have a couple of things we can draw. We can draw, okay, this is our last buy to sell move of supply. And again, we don't come back to that supply. And we could also refine that to this area here if we wish. Now we also have a drop base drop area of supply that we can draw here as well. I can draw this as a supply zone. Okay, we don't come back to that zone either. And finally, on the breakout of this support, we can draw this area of imbalance. Okay, so you've got this area of imbalance. Let's just mark that to the back in case it's not. And we can see the market actually breaks away, makes this swing low, pulls back into the imbalance. And again, this is where I can look for a trade on low time frames to target this low. Look at this, look at the amount of movement you've got there on a lower time frame risk to reward. That's how you generate those high profitable trades using supply and demand imbalances strategies. So again, this would be my breakout. Look, just mark this off. We never come back to it. We come very close, and many traders support and resistance would have this as a zone anyway. I would say, okay, we come back to resistance, we can sell again. This is what's happening. Let me explain. We have first entry here. We then break structure once again. And yes, we would have created a new area of supply. Now that supply got removed. But what's actually happening here is we have this area, okay, being swept in the market to fill more of the imbalance, to pick up more orders. We've already come off this area of imbalance. And that's all the market is doing here. It's pushing up to sweep this high of liquidity to pick up more orders into the imbalance. And that's where we can pick up another entry in lower time frames to target these lows. That is all it is when we come to supply and demand. Okay, support resistance traders would look at this as another retest, okay, of a broken support. But it's not what's happening. It is the area of imbalance once again holding price. So we have another push down again here. But this time, what we have is the last buy to sell candle, which creates an area of supply. So we break structure, and if we bring this line across, okay, what are they seeing? They're seeing a break of structure, a retest of resistance. We can even identify here, we have a liquidity sweep of this high into the supply. We don't quite test the supply on this first test. We continue up, we sweep through this high, and then we go into the supply. Now, if we could have had an area of imbalance here, if we didn't have such a big wick here on this candle, that could have created an area of imbalance, and this time it didn't, but we come back to the area of supply. We sweep into that supply, but again, you see support and resistance traders will look at this as a retest of broken support acting as resistance. But now you're starting to understand what's really happening. The supply and the imbalances is where the market is happening. Then we have liquidity here on a lower time frame. You would find a liquidity reversal. The market continues to drop. Okay, we break structure here once again. Market right across. We nearly come back to retest it as a broken support act as resistance. Now, again, we have what we class as the origin area of supply, which is here in the market. We don't come back to that supply. We then have this drop, base, drop move. So that would be a area of supply as well. Now, a drop base drop doesn't have to be a bullish candle. We can still have a bearish candle. And we have this drop base drop. Now, again, there'll be more on that and the rally base rally in the next video at the end of this video. Now, what we actually have here then is the drop base drop area of supply is what we see the reaction of. But that's not all. We also have here, and hopefully you spotted that area of imbalance. Okay, the imbalance zone as well as the drop base drop. And we come back to fill the full imbalance. And again, support resistance traders are still thinking, okay, we're coming back to test this area of broken support to act as resistance. That's not what's happening here. Here we do pull back. We create this indecision candle, okay, where many traders look to sell from, and we continue down. That's not what's happening. Hopefully you're starting to see what's really happening on these charts, and you're having a light bulb moment going off. Okay, if you are, drop the comment below and tell me this is helping you. Okay, you'll begin to really understand and read these markets. So again, that we break through with this candle, we come back to retest it, broken structure, acting as support. What is it really? No, it is going to be this area of imbalance in the market. Okay, the imbalance broke through, we come back, we fill it to the 50%, we push higher, a full fill of the imbalance, retesting of the structure, okay, and we continue down. Now again, we would have had here, okay, our last buy to sell move is here. We don't quite test it. We refined that to that candle anyway, is the area of supply. And we do have a drop base drop area of supply here. And again, the market doesn't come back to that area anyway. So this is that area of drop base drop where sometimes we can see a pull back into, like I said, or we can have the breakout area of an imbalance. That's how we look at using this. So again, the imbalance is what holds price. And we can identify we have another break to downside. So the market comes down, we hold the area of support structure, pull back. Even at this point, okay, we've broken out here. What do we have here? An area of supply. And what do we have here? An area of imbalance. Why did the market do what it did? It came back, it bounced off this area of structure support, but came back into fill this imbalance and into the supply to continue to break lower, where we then break structure here again. Now at this point, okay, we have one thing left over here. Again, we have another area of imbalance. And again, there is a tip to understanding imbalances, why this is going to be a reversal. And we have this last buy to sell move of supply. But as soon as I see this one candlestick, and again, on the lower time frames, you could have caught an entry here, okay, and good profits. Just because we're seeing this candle making a higher low, pushing high, doesn't mean you can't get some good sells here. At some point, you will have a losing trade when the market reverses. That is part of doing business. And that's what a good supply and demand trader understands. And a good businessman understand that trading is a business. This is all about supply and demand versus support and resistance. We've come back to retest this level. We've closed through. At this point, I know we're going to take out this high, understanding imbalance in the market. If you don't understand supply and demand with imbalances, you will not understand the concept here. But once we close through this area of imbalance, I know we're going to take out this area of supply and push higher. And that's what happens. We have this one last push down, and this is taking out this low, okay, of this candle. On the lower time frame here, we're going to see some sweeps in the market, taking up the liquidity, and we're going to find some areas of demand. The market pushes out. What do you see straight away when we take out this area of supply? We create this area of, okay, imbalance. Now, I know this is more about understanding the supply and demand versus support and resistance here, but understanding imbalances is key with supply and demand. Like I said, when we're looking for those reversals. So at this point, we can now identify that we had that reversal. This is our last push down. This is my breakout point. So we broke out. The market's come back to retest as a broken area of resistance now to act as support. But what is the market really doing? It's pulling back into this area of imbalance. And again, look, we then have another small breakout here to the upside. We could actually drag it right the way across, come back to retest it. So support and resistance traders are looking at a breakout candle, pulling back to act as area of support, continuation. Again, that's not the way I see it as a supply and demand trader. We had a very small area left over of imbalance there, but we also have what I class as a pre-imbalance. Now you'll learn more of this inside the imbalance playlist, so make sure you go and watch that as well. And we continue up and we hold and we push away. Now if we look at the bigger swings here as well, we do have another break structure here, but we failed to hold, we pushed through, then we push back up. We don't break out until really this candlestick. And again, we can actually identify here that we break straight back through. And so there's some losing trades potentially to have here. So again, we break structure here. And this is a good example right now, this current example of understanding support resistance and understanding supply and demand. When we break through here, a support resistance trader is going to be looking for an entry right here to go short. But as a supply and demand trader, that's not what we're looking for, are we? Do we have any areas of imbalances here? No, nothing ready to take a trade from. But we do have this last buy to sell move of supply. Now we can also refine that to the last bullish candle where the market comes in, and we could have had a sell here to downside and another sell here as well. So the first time we sell down, we're just selling down to fill this imbalance on this candle. The second time we're selling down, we go for liquidity of this low. But as a support resistance trader, you're just basically seeing the break of this structure and a pullback. You're not really understanding what's happening now. We want to come back into the supply at that point to look for a sell. Now at this point, on a low time frame, we're going to find a break of structure, retest, break of structure, and a push down to take out this liquidity. But understanding the differences between supply and demand versus support and resistance, this is how you should look at reading the charts. So let's have a quick look at a 4-hour time frame here. Let's just remove everything off those charts and we'll go to a 4-hour time frame quickly and look at current price. So we look at this current price in the market. We can identify the market here, broke structure. We came back to retest that area of structure and they'll be looking for a sell here. So they broke out, retest, they'll be looking for sell. Doesn't happen and we pull back. So if we're looking for any entry here as a supply and demand trader, we'll be looking at this last buy to sell move for potential sell. Now we do come back into there and we do drop back and then we continue up. So potentially a lower time frame here, you could have caught a trade, you would be at break even, or you could have taken a small loss. Now you can also refine this to the last bullish candle. You can see the market does come up here as well, and then we push down. So at this point, we're waiting for that break structure of this high. And you can see that the market does break out, pulls back. It kind of up and down through this level, doesn't hold perfectly. Like I said, no, as a support and resistance trader, you would have some kind of zone here more than a level. Surely that's the way you'd be looking at it. But as a supply and demand trader, what do we have here? We have a break of structure and we would have an origin zone we could draw down here. This would be my area of demand. And we also have a rally area of demand I would draw here. Price doesn't come back to it. That's area. And finally, we would have an area of imbalance, that I can draw here as well. Mark that to the back. And we'd have another area of imbalance that I would draw right here. Now notice how this higher area of imbalance never gets closed through and it holds price. Just move it down slightly to the high of that candle. So we failed to close through and we hold price. That is why price held here. It's not because of this level of broken resistance acting as support. It's because of this area of imbalance was holding price up. We came through into the imbalance below. We then broke out higher here. So look at this. If you're using this as, breaking as resistance, holding as support, you will be confused as hell here. You will be confused massively here because you just don't understand what's happening. We're going up, down, up, down, up, down through price. What we can identify is we did have an area of demand here as well. So now I've shown you how that imbalance of the breakout of this level held, okay, and we had the breakout again with this area of demand where we're looking for that trade. So this level has nothing to do with why price, okay, was breaking higher. And once you understand these concepts of supply and demand with market structure and balances, that's going to make you a much better trader. If you're not sure about what I just went through here, go through and watch this again, because watching these videos over and over is going to help you to master these concepts. So that rally-based rally, drop-based drop. How can we use that in the trading of supply and demand? Let's go through it right now. Okay, so I've done a sketch quickly for you here to show you the rally-based rally and the drop-based drop when we have the one candle. Now, there can also be a cluster of candles when we see these moves, but for now, let's just go through the one single candle. What we're looking for is the bullish move to the upside here. And then we're going to create a one candle, either bearish or bullish candle, but normally we're going to see a bearish candle pulling back. And then that's going to leave here the area of a demand zone. We then push out to the upside, continue away. So this creates what we class as the rally base rally move. Okay. Now the opposite way we look at the market, we see the drop. We're then going to have like that bullish candlestick. And then we have the continuation down the move. That's going to create that one candle drop base drop. And that will create an area here of supply. So this will create an area of demand where potentially we can see price, grab my tool, price want to come back to the demand and then continue bullish. In the same way, looking at price here to the downside, we can see a pullback into that supply to continue bearish. That is all they are. That is all the rally-based rally, the drop-based drop zones are. You want to have a good understanding, okay, of where these zones are likely to occur. Now, the previous video went through on the supply and demand versus support and resistance. You'll be able to see exactly where they tend to occur. But the idea is you can either have a single candle, or we can have like 2, 3, even 4 candles before we see the move away, and we create that basing area. It's all about creating the basing area before we see the drop, the downside, or the move to the upside. So that's basically how we look at the use of these candlesticks when we're looking for those rally-based rally and the drop-based drop zones. So let's now have a look at the price chart and see how you can identify these on a price chart. So on the EURUSD on a daily time frame, it's the simplest pair to look at really, this type of concept. Now the rally-based rally and the drop-based drop will occur with strong moves in the market normally. And you're going to find they're going to occur when we see a nice bullish or bearish trend. So we look for a nice bullish trend. This is a good example. Let's see what we can see. So we can see that the market here, okay, is breaking this structure high here to the upside. Now, when we do break this structure high here to the upside, we create this higher low here in the market. Okay, that's going to create our normal area that we can draw out as an area here of, and let's mark it out as a daily area of demand. Okay, so we can identify the market breaks out, makes this high, we pull back into demand. Now, as well as this as our origin demand zone, we will have that rally base rally, and this is our rally base, okay, rally within this move up. It's not always going to be where you expect it to be. Now, this is also a rally base rally. Now, that rally is what breaks out of this high. So we just take all this marking off, just go back on that there. Okay, so let's just go through this again. So let me just show you. When we have this break of structure here to the upside, this will be my area of demand, my origin demand. But I also can draw this demand zone here, which will be my rally base rally. And you can see that we actually come back and we hold this rally base rally. And if we refine this, we can refine it to the wick of this candle, because this is the wick what basically takes out liquidity of the low, and we break up this rally base rally. So always look at the market And a rally based rally tends to look like this. Okay, so here's what it is. It's a move up, move to sideways, a move back up, and obviously a move down, sideways, move back down. That is all they are going to show you. Okay, so this is the era of a rally base rally area of demand. Now again, as we move higher, we create this rally base here, one candle again. Remember I said that previous sketch at the beginning, I said we can have a one candle creating that base, or we can have a cluster of candles. So if we look at this move here, it's got more of a cluster of candles, okay, here, and then we rally away. This is more of a one single candle. Okay, we do push down low on this wick here, and then we push away. We break this structure. So we can form in a few different ways. But if we're looking for the origin here, this is our origin area of demand that breaks out of this swing high here. Okay, this is our origin demand zone, breaks the upside. This is our rally base rally. And then we move up and we pull back here. Eventually, we break the upside. And again, this would be my origin demand zone. Here we push up, but then we have the rally base rally move. So this becomes our area of demand, which is the rally sideways movement, because we pull back, continue away. Now we could use the full move here, which would be from this swing high, okay, to the downside, and we move it across. And you see price actually comes back to that demand zone. That's because this is our last sell to buy move. Now we can use that, have it in mind that price could reverse off the high of that candlestick even. Doesn't have to come deeper. This would be more of a refined zone. But again, just understanding that this is the origin. This is the rally base rally zone. Again, we continue forward. We break structure. We create this. Okay, again, we create this is our area of demand, which is our origin demand zone. The price comes back to that zone. We break out here. What do we create? A rally base rally. So again, we create this area of demand. Now that demand zone is where we see price hold. We failed to run the high, okay, just here, and we drop back deeper, removing this demand zone by basically taking up the swing low here, pushing into this area of demand, continuing. Now I always suggest that you look to trade the origin move of supply and demand, because it's always going to be the best zone to look to trade. But on this occasion, you can identify that we had this rally base rally. Now on this move up, we break structure. We don't have that. All we have here is this origin area of demand. Price comes back into that demand, we continue away. As we continue higher, we have another breakout here, just a demand zone. Then we have another breakout here. So it's just a simple break. Okay, we have no rally base rally. Okay, we could say this is a rally base rally, but it's also going to give us small origin zones at the same time. When we come back into this area, okay, we then can see we break down. So we break down again, that we break out again. So we drop down, pull back, break out, but we create this drop, base, drop. So there is your area here of supply, and that would be the supply you want to see broken through. This is the last supply in this move to downside. So we drop, okay, we base and we drop, but we also have this drop, base, drop. So this last, well, pin bar is the area of supply. That gets reversed by this candlestick. Now we do come back and we do sweep that low. Now, if you're not sure about liquidity in the market using sweeps, everything else like that, then there is going to be a full playlist. You'll find that within the homepage, which goes through everything on liquidity. That is going to help you to understand how I look at liquidity in the market. Now, after this, we break out again. Okay, you can see we break bullish to upside. That leaves me this large sell to buy move. Okay, there is no rally base rally here. We break out again to the upside, leaving this full sell to buy move. Okay, but we can refine that to the last bearish candle. And then what do we have? We have a rally base rally. This time we do have that rally base rally, which holds as demand. Price comes back in and we break structure. See, the rally-based rally can either happen with a long, strong trend in the market, or we can see it which creates that rally-based rally right before we see the break of structure. So if you're enjoying this video, you want to see more videos on supply and demand, especially around the rally-based rally, drop-based drop, leave a comment. Let me know you want to see more videos on these types of content going forward. So again, look, we have a push up, we have another failed break here to the upside. So the market drops down, failed to break out. That means this becomes my last area of demand in this process. Sorry, not this one. Let me just mark it out again. This is my last area of demand. Sorry, that's my last demand. That's the one that breaks out of this structure. Okay, so we need to see that removed. This again is a liquidity in the market. Over to the left here, we may find a reason for why this has happened. I'm not going to go into that in this video today. It's more about the rally-based rally, drop-based drop. So here we can identify the market drops down. And before we remove this area of demand, what do we see? We see a drop, base, drop, base, drop. So we have this one single candle area of supply created. And we have this small area here created before we remove this area of demand. Because for a full reversal, this is my move up, pull back. Yes, we could have a breakout here. This internal range area, which is this candlestick, which creates the breakout. So there's drop, base, drop. And then we have the main area broken right here. And we also have the drop, base, drop, okay, breakout. Then we have the pullback here and a breakout. So we have a standard area of supply we could draw here, or we could draw it from the origin of this candle, whichever. We then continue down, and then eventually you can see the market breaks to the upside. So we do have a drop, base, drop. Once again, right there, you could say is a drop, base, drop, but it's not a zone I'm going to draw. I want to see a reversal of this swing high. That happens. So from this low, we can draw our origin zone here of demand. And then we have this, we have the rally, base, rally. So we then have this area we could draw. Then we have a rally, base, rally again. Hopefully it's starting to make sense how you can see these zones. So this is the last zone that breaks this structure. Then we can see we do have this breakout here to the upside, leaves this area of demand. So we have an area of demand here which gets broken through to the downside. We get wicked through by that candle. Now it doesn't break structure there. So we have a drop, base, drop. Okay, that then creates this area of supply. So we drop through, we failed to break structure here again. Okay, we have a sweep of the low, again, liquidity sweep, understanding that. And then we have a nice big break to the upside. That leaves me this area of sell to buy move right here in the market. That would be the last area we want to see mainly taken. So this would be the main structure reversal in the market. But on the way down, we can identify we have a drop, base, drop, base, drop. Pull back, breakout. So you can see that we have all those areas. We have a breakout here. We do have, this is a drop, base, drop. Okay, we do break structure there as well on the way down. This is a pullback now already. And then we have another, okay, drop, base, drop. New area here, you could say was a drop, base, drop. Not zones we're going to be looking to trade from. You see this did work, but this is the main reversal. That's the push up, that's the pullback. So once we break out here, we can see all these drop, base, drops. And the last one you said would be, well, we have this one here as a last drop, base, drop. Okay, which does break through this structure. We reverse through to only really manipulate through this high. And then we break structure again. So on the way back down now, this is the origin supply that breaks this structure. And by the way, the origin supply on this one to downside would in fact be this full buy to sell move we can mark here. I'm not going to mark it out, but you need to keep it in mind. That's the last buy to sell move. But this is the drop, base, drop moves within that move. So this area becomes my origin. So this is my last buy to sell move here. We could draw. And again, you can refine it to last bullish candle if you wish. This is my drop, base. Okay, there's that one single candle as the basing again, and we break out. Now we don't actually come back into supply there, but we do come back into the of imbalance. We do have that full imbalance playlist. You can go through and watch more imbalances within the channel. So again, go through and watch those playlists as well. So you can see that the market then breaks through again. So nothing there. We have a normal push up, breakdown. That's the era supply. Okay, right there. Price holds at the supply. Again, a normal break to the downside. So that creates what? A new area of supply. So at the moment, we just have the simple breakout. We have nothing else here. Another break structure to downside. That creates my area of supply. Okay, the market then removes that area. So what that is, a valid break to upside once we see this candlestick. So let me just show you. We failed to break and close this level here, but we break it there. So what that now gives me, it gives me, let me just double check that actually. Well, actually, it does just break through. It does break through. So what that gives me when we do break through here is this last sell to buy move. This is all demand. Okay, we can refine that to this last candle as well. We can see price doesn't come back into that zone. Okay, that's what you need to understand, that this is the last sell to buy move. But look at this. On the way up, we created the rally base rally move. Now I'd mark it from the low of this candle, and there's my demand zone. Well, this time you can see the rally base rally breakout is what held price. So after that, we break through this high. And again, look, this is my origin sell to buy move. You can refine it to this level. On the way up, we do have a rally base rally move, but that actually gets swept, I believe, right there. Remember, these trades actually taking them. So we swept through, we continue to go bullish. Again, there is our drop, okay, continuation. So all we have here is a typical last sell to buy move. And this time, you see, if we refined that zone, we never would have got triggered. We come back in. And again, you see the market breaks out. See, it's very, very simple to read structure with supply and demand. There's my last sell to buy move. Okay, we come back in once again. Now on the way up, we do have these smaller zones. It's just a valid breakout there. So that would be an area of supply. Okay, and again, we do break out there. And that means that we do actually shift structure to downside there when we remove this last sell to buy move area of demand. So that means we do have a potential buy from this demand going up to this area of supply. That gets removed, break structure there. Now look what happened. We would have had this as our area of supply. Demand. Last sell to buy move. But on the way up, you can see we actually have a push up. To show you where this comes to. We have a push up. What do we have here? We have a base. Okay, look at this. Look, we have a push up. We have a sideways basing price action. You actually have like a move up here on the lower candles, but we have a basing nevertheless. So there's a push up, sideways, push up. That is your basing. Now we don't always have to see it with that single candlestick. We can see it with a cluster of candles. There's your cluster of candles. That becomes my rally, base, rally. Now price does hold, and then eventually we get pushed through. But that's just to show you that is the actual rally, base, rally. Now this is the main swing reversal for me here once we break through on this candle. But if we look at price here on the way down, okay, that means this becomes my last buy to sell move, where price is in fact now come into. Again, you could refine it to that last bullish candle, but you need to remember from this move up is where we could see a drop back to downside. Then we also have on the way down, this move down here, we have the break of structure. So that's fine. We have our normal area of supply we could draw there. Price comes back in. We then have the next break of structure, which is here. And again, we just use this as our supply. Market does then create this break of structure. And again, we'd have this candle as our area of supply. And finally, we have this break of structure where you could use this as area of supply. The market then reverses that area. Okay, there's no drop base drops in there, except for the full swing to downside is in fact a drop base drop. So you have drop, base, drop, base, drop, base, drop, base, drop. Now the reason for that to be a drop base drop all the way down is because it's actually a full swing pullback. If you look at this, this is our main break to the upside, our pullback, but then we reverse structure here. So now we have another pullback to the upside. So we can look at the same thing, this being a rally base rally. Again, we can mark these off. We can identify that we have this, our last sell to buy move. Price comes back in, and this will be my last sell to buy move again. And we'll just wait and see if price comes back to it. But we can also look at this as a rally base rally on the swing pullback. So we have that internal structure, we have that swing structure. So that's how we simply would look at those zones, okay? How we look at the rally base rally and the drop base drop. Today I will cover the break of structure supply and demand strategy, how you can use the break of structure to your advantage when looking for those supply and demand zones. So I'm on the USD on a 4-hour time frame, and let's just remove this indicator off. We don't need that on. And I'll go through just understanding how you use the break of structure technique to find your supply and demand zones. Let's go back in price a bit. Let's start off around this area, okay? So what you're looking for is the market to show you that directional bias. So from down here, okay, we can identify and mark this off, a break of structure. Now let me just mark this off as a 4-hour structure. So we can see we have this break of structure upside. Now let's go closer into this area. When we see a break of structure like this, let's mark it off, we're going to create an area of demand. Now we also create areas of imbalances as well, but that is a completely different type of trading. This is all about the break of structure with the supply and demand. Now, of course, if you want to learn more on imbalances, there is a full playlist on this channel. I do suggest going through and watching the full playlist from the first video to the end. Every single video has been created to help you in your trading. So for an area of demand here, we look for what we call the last sell to buy move. You already understood this by going through the previous video in this playlist. And of course, if you haven't been through those videos already, stop this video right here, go back, watch the first videos first, and then carry on watching this video. So we can see from here that we can mark this down from this last sell to buy move. Now our class is the last sell to buy move for me is where the market creates the origin. Okay, so this is the origin move where we create the last sell candle when we buy up to break this structure. And that is all we're looking at really. Now we also have this move here within this area, which is a sell to buy move. Now this is what I class as the last sell to buy move, which is that rally base rally. So we can see that this is also an area of demand that holds price. If we look what happened here, we can see that the market rallied out, we broke this structure high, and then we pull back into the demand and we continue to move to the upside. So it doesn't matter whether you're using what I class as the origin zone, and the origin zone is this zone right here. And zoom back out, we'll be able to see this better. So we have this as our origin zone. Okay, this is our new swing high that broke structure here. This is our last lower high because we had this market pulling down. This is our last low, broke structure, we pull back and we continue to go lower. So once we understand this concept, this is where you're going to draw out your areas of demand. And it's down here you can look for your entries. Now, I'm not going to go into the entries too much in this video. We'll do other videos going through entries, but there is an easy entry here. Then we look for the market to continue to run this high, which is going to be another break of structure to the upside. Now, of course, that will leave a new area of demand. There's also going to be our weak high. And when we're taking an entry down here, and just to give you a clue, this arrow is going to show you a perfect entry. We can target this high. And you can see that from this area, we went all the way up and we broke structure to leave a new area of demand. So how do we do the demand again? We look for the lowest point in this move. So the lowest point is this bearish candle. That's our lowest low. And from this candlestick, we look for the last sell to buy move. It's going to be from the highest candle to the low. And we mark this out as our area of demand. Now, there's a reason why we use the last sell to buy move, because anywhere in between this high and the low of this candle is where we can see the market react off. Now, we can refine these zones, especially this one here. We can refine this down to the open price. That's how I normally would look at refining my zones. Again, here you can refine this zone down here as well, but you can see the market doesn't come back to that area. Now, if we mark it off from the high, we do come back to the top of that zone. Now, it's not just this. This is our origin zone of demand once again, and this is our rally-based rally zone where we can see that price comes back into as well. So you can see how those zones will work together. And we also have here an area of imbalance, which also held price, but we're not going to go into imbalances. You need to go and watch the playlist after this playlist. So after that, we have another entry down here. And again, we see the market breaks structure once again. So once we break structure, we look to draw our new zone. Now, this is our current low. This means this is our current area of demand. Now, all what's happened here is that we broke up. We wicked this high, swept it, pulled back into this demand, and then rallied out again. That means we have this as our rally-based rally zone, okay, of demand. And you can see price comes back in. Now, again, if we refine that to this candle, we wouldn't get an entry. So you can see the importance of understanding the last sell to buy move here. Now, when we get to the bearish side, you'll see it's the last buy to sell move. So again, once again, we look for the market to want to continue higher to break that structure. We have a nice sweep here, the market, a nice bullish pin engulfing. That is another perfect entry candle, and we break structure. So where do we look for our zone? Once again, this is our low. So our demand zone is from the high of this candle to the low of this candle. And see we wick back in and we push out once again, and we break structure once again to the upside. So you can see the last sell to buy on this one. Now, if you're thinking it's this candle here, then you're incorrect. This is our last sell to buy move. Okay, because it's the lowest low at that point. That's what becomes our area. So again, we break structure. Look where the price came back to. Now we can mark off this high. We break structure once again. So our last area of demand would be here. And you can see the market breaks through. That now means we have a market structure shift, a break of structure to the downside. Now, of course, if you don't understand market structure, then you need to watch the playlist on market structure. Again, it's on the homepage of this channel, and you'll be able to go through how to read market structure, use of multiple time frames, the use of the internal and swing structure is all important. So here we come back down into this area of demand. Now, we're not looking essentially now for a buy of this demand, but we're looking for a reaction of this demand to push price higher. And that's what's happened here. We come into this demand zone to push price higher. Now, this demand will remove because it's been removed, and we look for our area of supply. On this occasion, this became the supply zone. This is our area of supply. This is our last buy to sell move. But on the way down, we did make this very small drop-based drop. Now, it's not a zone that I'm going to look to draw. It's too small for me. Okay, but we do have an area of imbalance here. I'm just going to draw it quickly so you can see what I'm talking about. We have this area left over imbalance. That is where price came to the 50% to hold to push back down. Again, the imbalance playlist will help you with that. So expecting price to break structure again, we do break structure once again, and we're looking for that area of supply. There's our current high. This becomes our last buy to sell move. Okay, once again, we can see the market comes back up inside this area of supply. We have here what we class a sweep inside. That's a sweep inside supply. We expect price to run the week low. Where does the market go? But look what happens this time. This is how we understand we're not drawing an area of supply here. The reason for this, we never had a break through this low. We only swept it. And this final sweep of the low and this low once again on this candle indicates to me we're going bullish. And this area here of supply is likely to fail. And we also know this area never actually got quite to price, but came very close as we came off this area of imbalance. So once again, what we're looking for now is a reversal back to the upside. That's a break of structure here. So if we're looking for a break of structure there, where do we draw areas of demand? Well, this is our low. So this would be our last area of demand. In fact, maybe that this candle may be lower. It's not much in it. Okay, but that would be our area of demand. You can see we have this breakout, retest, continuation. We also have an area of demand that we draw here. Okay, inside that demand zone, this is the rally. So there's your like rally, base rally. And of course, we have this area of demand here that we can draw. Okay, the price unfortunately didn't quite come in. But again, we have an area of imbalance where price did come in. So this is the breakout. We have another breakout here. What does that leave me? That leaves me this sell to buy move again now. Okay, the market does come back in and we have an entry to go higher. Now we have a sweep of this low. So on a lower time frame, you're going to find an entry here on perhaps a 15-minute. So you can see how the market continues to show you those areas of supply and demand and how simple it is when you understand the breaker structure supply and demand strategy. Now this video is ready to teach you the concept, finding and marking out those zones of supply and demand quickly. Now, if you want to see more videos on how we look at the strategies with supply and demand, give me a thumbs up to let me know that's what you want to see more of. And you can drop a comment to tell me what you would like to see. Okay, that's what I'd like to hear from you, what sort of videos you want to see. So again, look, we continue up off this area. Now we don't have a actual pullback. We have this as an area of demand. But after that, we don't really have another pullback until I would say this swing high. We have a final break to the upside. So look, we don't pull back to area of demand, but you can see we push through here of this swing high. We obviously have this low in the market. We have a sweep. We push through. And because it's the low here, we break structure back to downside. But at that point, this became my area of demand, okay, until it's broken. Now it's broken on this bullish candle when we wick through. Now it could also look like it's going to be a sweep and we continue higher. When we have these reversals, this is the point you're going to start losing in the market. Now there's nothing you can do about it. You have to take that loss, pick yourself up and go with the next direction of the market. It's all part of doing business. Too many traders out there do not look at trading as a business. Now, of course, if you want to start learning to trade like this as a business, I do suggest checking out that trading coaching experience. You want to find out more, then there will be a link in the description of this video. So here, what do we see? We have a break of structure. That comes from this swing high. So now we're looking for the last buy to sell move. That is that move there of supply. Let's remove this demand zone. Okay, and let's remove this sweep level so we don't get mixed up. So that's the area of supply. You can see very, very close there, nearly came in. But on the way down, what do we have? We have a drop, base drop, area of supply. Okay, and again, another drop, base drop, area of supply. So you can see how you could easily call it entry here. Then after that, what do we look for? We look for the next break of structure. Okay, let's move across. So we can see we break through here. We create the next area of supply here. Okay, where we have our last buy to sell move. Okay, we continue with that bearish movement. Where's our next breakout on that candle? So we mark off from this. Let's just check where the swing high is. Okay, so the high is this candle here. Because that is the high of the move, I will use these two candles to the high of that candle to mark up my area. Now, look what happened here. We actually swept this high. And let's go closer into price here. So we're reading the candle by candle movement. We have a swing low. We have another breakout. That means we have this is our last area. It's more like a drop, base drop. So it is a breakout. It's a valid pullback and a valid breakout. Okay, so the market does come back and holds that. We then have another swing breakout and we have another buy to sell move. So at this point, we're still looking for sells here. The market then fails to run lower of this towards this weak low. Okay, and we break through eventually on this move up here. So if I remove this area of supply, we can then draw from here a break of structure, which then creates this last sell to buy move area of demand. So at this point, it's going to get very, very confusing on where the market's likely to want to go. Let me just remove this level. So we now have an area of demand here. We have this area of supply. This area of supply, well, we reacted off this supply and then eventually we broke through, removed it. And then we've only wicked through this supply. Now that does remove the supply zone for me. Okay, but what we do have here is this sweep of this high. Now, it's going to be very hard to look to take a trade here because what we've then got is the area of demand below. Potentially, we're looking for a buy to go long. Now, it all depends what we're seeing on the higher time frames here. We need to look at higher time frames, multiple time frames with supply and demand, how you can really look to understand this. Now, there are videos in other playlists. We go through multiple time frames with the use of market structure. It's a great video. But if you want to see a video in this playlist where we go through multiple time frames, understanding supply and demand, then leave that comment and let me know that's what you want to see. So again, we then break down, okay, from this point, we have another reversal to the downside. This is a very complex area here, but I wanted you really to understand what is happening. And yes, you could have losing trades here. On lower time frames, you could get some little wins, and we could look for buy. We may have a losing trade, but look at the way the market's just pushed down. Not likely to find an entry there. So here we can see we break through. This is our last buy to sell move. Okay, we don't really come back to it. What do we have here? We have an imbalance zone where the market does react off. So once again, we pull back and we break this structure to downside. Now this would then be, this is the swing high. You could say this is the full zone where the market's coming back to. You could also refine that to the last candle like this as well. But you need to understand this is the full zone. So we mark that across. We do wick through. Now all that's doing, okay, is going into that zone which we never went into. Okay, so we wicked through. We've swept that high. Yes, we removed this area of supply, but it's not what. Hopefully you're understanding. It's not a breakout, so we can look to sell from here. And we target the weak low down here. That would have been an awesome trade, okay? Understanding what's going on in the market. Just because we're in a sideways range doesn't mean we're going to reverse and go bullish. Now, yes, we broke out here. And yes, we have a base drop area of supply here as well. But like I've always said from the beginning, the origin zones are your best zones to be trading from. But you can also look at those base ready zones as well. But you need to have the best location. So we break structure once again. Here to downside. This is our main origin zone. And yes, we do have an area inside. And we also have this base drop zone there where the market does react off, okay, and continues lower. So at that point it did work, the base drop. We broke structure once again. Okay, and then we have this as our high. So this becomes our next area. You can see the market reacts off and we push lower again. Okay, so you can see how simple this is. We break structure once again. We look for the last buy to sell move. Okay, the market comes straight back in. And do we break it? Okay, we don't break the zone. We wick through, we don't close through. So it's not a break structure. So what is it now? It's a sweep. Okay, now this is all about understanding liquidity in the market. And there is a playlist coming in this channel for liquidity. Now there is a video already out, so if you want to learn more about the liquidity sweeps and the runs, go and watch that video after this playlist if you want as well. That'll teach you about liquidity. Now all this is doing is wicking through this high, going into this area of supply above. Okay, so then what do we have? We have another break of structure here to downside. Now I do hope you're enjoying this video so far. It's giving you some great education. That's the whole point of these videos, to teach you the concepts of supply and demand, imbalances, market structure, okay, and liquidity in the market. That's all you need to be successful to read these charts. And again, that we break through just on that little bearish candle really. So you could say it's nearly another breakthrough there. And that would give us this movement here. And again, that we remove the supply, but all we're doing is sweeping this high. Now, what are we sweeping into? This area of imbalance. That's why everything works together. You can't just trade with one concept, okay? That's why there's a separate playlist to teach you each concept, and then you can put them all together. And again, that we failed to run lower and we broke structure to the upside. So at this point, we do have a valid break to the upside. Now that removes that area. Let's move across. I know in hindsight we can see what's happening, but this is then our last sell to buy move. Now again, look, you could say it's from this high to this low is your full demand zone. And that's why we just see price pulling back and then continue away, because that's the full zone. Now we do also have an area of imbalances here as well, but you could refine this all the way down to this zone here. And you can see that we have reaction, reaction, push away. Now we know it's going to be removed, that zone, but we can then identify, okay, we have another break of structure here. And now we potentially think we're going bullish. Okay, so we have this area of demand. There could be potential loss. Okay, like this could have been potential loss. You never know. And again, we actually just about closed that one as well. So we've actually closed that one and we've held this area here of supply. It's important to see where price is coming into. So we run straight through that area of demand. See, we break, there's your break of structure, okay? Where is our area of supply? Well, this is our high. So this becomes my area of supply. Where does market run back into? Runs back into that supply. And, okay, we don't quite run into this area of imbalance. So the supply is what actually holds price. Then what do? We break structure here. A very small break structure. This becomes our actual area of supply. And we continue to run lower. So the market, okay, is then running this low as we then break structure here as well. So we drop, pull back. Now all we're doing is we're pulling back again into this area of imbalance. So our last, okay, buy to sell move is here. We just failed to pull into that, but look what we're coming into. Okay, we're coming into retest underneath this level. Now that is where the support and resistance traders are believing we're retesting from a broken support become resistance. That is not the way I teach it. Okay, not support and resistance. If you want to make sure you understand that concept, go back and watch the early videos in this playlist. It will teach you more on support and resistance versus the use of supply and demand. So look, the market drops down. We break structure once again. There's our last move we can draw. Now we do actually break out. Now this is where potentially we start having some losing trades. But when you're capturing these sort of trades from up here to downside, 1 or 2 losing trades, 1 or 2% loss when you're having some 3 to 4 risk reward trades. So you can see that we actually break structure, remove this area of supply. What is that going to create? It's going to create a new area of demand. So there's my last sell to buy move. That's all demand. We break up, we pull back in. We're expecting to run this high, it fails. So you could have called an entry in here on a lower time frame, but majority of the time you'll be out with some profit already, so it wouldn't be a full loss here. The market does not run this high, and what we actually do is we run this low, so we have another break of structure. So we just run higher, pull back, lower high, run that low. So now that means we have a new high from this high. This is then going to be my area I'm going to draw of supply. We can see the market comes back into this imbalance, into that supply, and then we run lower. So you may have had a couple of losses there, perhaps on that reversal, but then you've caught this trade over here potentially for an awesome move to downside. So you can see the market breaks through, leaves this area here of supply. We just about test it. Let's just bring that down to the right area. Yeah, we test that area of supply, and also we go into this area of imbalance. Okay, we break structure once again. I know this video is being very, very repetitive, but this is how you learn, okay? We learn by going over and over and over that same concept. And that's why each of these videos would teach you step by step each and every concept. Now, this becomes my area of supply. Price doesn't quite come back. We come back into this area of imbalance when we sweep this high. Let me show you what I mean. So we make this low. We pull back. Okay, we break structure. What do we create there? Create an area of supply, right? So we push through the supply. We don't close it. That's just a sweep, okay? Which means we can then still sell this market. Add a sweep into the area of imbalance. We also get that retest of that area as well. So we're still looking, we can trade this down. We don't get anything else there. So that's a valid sell we can take here out of that area of imbalance. We break structure again. Okay, this then creates this area here of supply. Market comes back into. We have across, we can start to see that eventually we break structure here to the upside. So this pullback, okay, we can see we've got a pullback internally as we go bullish. And yes, we can trade these pullbacks, okay? We can trade these counter trend moves. It's understanding how to with multiple time frames and with the use of swing and internal structures. So that area is removed. That means we have this low, we leave this area of demand. Then you can see this demand was actually react of this area. Now on the way up, okay, we do have more demand zones that you can draw. Okay, that held price. We have another rally-based rally area demand here. Price was held up there. And again, you can see price does come back into that zone. Okay, because this is a breakout. We don't break out again. This becomes our new high. This becomes our new breakout level. So the market does come back eventually into this area and hold at this area of demand. We then are going to create a new area here. Now remember, these are origin zones. Okay, these are your best zones to be trading from. Yes, we create the last area here of demand. Okay, but look what happens. We come in, small push up, and we push through. And that's where you're going to take some losing trades. So be very cautious what zones you're going to trade from. Now we can also identify here. We have this push in. We have a sweep. Okay, we push up. We're expecting the market to go up to take out this high. We don't, we push back down, and we have another sweep of this low. Now you're going to see this type of price action, especially when the banks, institutions are looking to run those stops to push the market higher. It's going to bring in sellers. It's going to run the stops of potential buyers here already expecting this high to be run, and then it's going to continue on its way. Now look at this candlestick. We haven't really talked about entries or nothing on this video, but look at the candlestick formed here. What a candle after the sweep. Again here, look at the candle formed after the sweep. Yes, we could have got some good movements up here. Potentially could have been a break-even trade. Okay, some profits may have been taken on the way up, taking up this high, take out this high perhaps. But this would have been your entry for the main break of structure, understanding the use of candlesticks. So we do break out here. And again, there's your area of origin. Now it didn't come back, and this is our last rally-based rally zone where price does come back into. Now for me, price is not just coming into this area, it's coming into this zone, and it's holding up the 50% of the imbalance. That's why it's important to understand different concepts. Again, there's our next break of structure. Okay, so we break through, pull back, and we break through, and finally you can see we have this is our last sell to buy move. Okay, area here of demand, and we continue on its way. Today I'm going to talk about that Forex supply and demand entry strategy. More, we're going to look at what the class is the set and forget strategy, and we'll also quickly look at the confirmation entry. The understanding of using a Forex supply and demand entry strategy is really finding the best zones to trade from. Now, the way we can do this is we can simply look at using our market structure and applying our zones. Now, we're just going to look at current price here as we move to the upside. If we look at this current area of price, what we can do, we can mark out, okay, this break of structure to downside, and then we continue to push lower. What I'm just looking for here is a reversal in trend. And we can see here is our first reversal in trend. So we've gone from being in this bearish market to reversing to a bullish market. Now there's a reason we're doing this. Zoom out. We had this bearish move down on a bigger swing. Okay, we can see we had a break of structure at the same time, right? And that means we have this higher swing, which is classed as a strong swing high. And we're looking really for the market, if we zoom out, as it makes this pullback, to want to run this low. So we now have what we class as trading range. Understanding your trading range is very, very important. Looking for now is a reason to look for a buy. So as we break structure here, we can identify we have this as our origin area of demand. And then we have this as we class as our breakout area of demand. Now, on both occasions, price hasn't yet come back to the zones. So we continue with price. We break out again, leaving this as an area of origin demand. Now this time, price comes back. So how do we look for a trade here? Well, if you're using the set and forget entry style for the entry system, we just be looking for entry to pull back into this zone created for a stop below the low. And our target would be targeting the week high. Now, once we have this as a target, what you can do, you can look at this as being where you're going to take some off the trade, or you can take all the profit off the trade. Now, if you want to take more profits, what you can do is start looking for the swings to the left, okay, where you can look for potential targets. Now, we've got this high here. So you could look to increase them to take out this high and this high. So you could look at taking 3 profit targets if you wish. That is totally up to you, but the entry strategy is understanding the set and forget. Now, the set and forget means, okay, exactly as I say, we place our entry once we see this break of structure at the area of demand, our stop at the low, and we place our targets. Like I said, whether you're going to go for previous swing high targets, or if you're going to just target that previous high created. Now, majority of the time, you will find the price will come into the demand and want to run this high. That's your weak high. It's our strong low of demand. So if you go through that, it's going to give you much better consistency when taking these trades. So again, when we break out here, right, we create this as the last sell to buy. Well, in fact, this actually is the candle. So it'd be this one here. That's our area of demand. Now, price hasn't actually come into this demand yet. So we continue to look at price. And then we break structure here to the upside, leaving this area of demand. Now, prices come back into this demand. Let me just mark that off again. But would you be taking a set and forget buy here? Well, perhaps put your answers down into the comments of this video and tell me if you would in fact be taking a set and forget buy off this area. And I'm going to stop there right now at this point. We'll come back to this at the end of the video, and perhaps you can have a good look at the comments what other people have said as well. So that's the area we're going to look at in a moment. Let's go back in time and let's look at other areas of price. So this is the same thing. We can look at the same thing down here. We can see that price is breaking structure. So we break structure. Where's my high? This is my high of the move. This creates my area of supply. So again, we look at this set and forget entry. Once we see this push down, we'll place our order, our limit order, stop above the high. Once we see the pullback, that is, then our target would be to target this low. Now, why are we targeting this low? Because this low becomes our weak low. This is our strong high up here and our strong area of supply. So we're looking for a continuation of the trend to come in. That's our set and forget entry. That's our target, just over 2 to 1. Now, again, you could look to run lower, which means you'd have to look back in time for an area to target. So we have a swing low there you could target, which means you could look to increase that, say, all the way down here for nearly a 4 to 1 risk to reward. So you could take some profit off here, final target there. Again, that's up to you. I'm not giving you that advice. I'm just showing you how you can look to use an entry model using supply and demand. So when we break structure again, we look for the next zone. This is our next zone created. Now, we do come back to the area, but it's not an entry zone I would be taking. Not right there. And unfortunately, we don't break out until here. So this pullback I would not be taking either. Okay, so this would not be an entry I've taken. We break out again. This is a valid zone. This would be my zone. Right, so price does come in above, but again, this would not be an entry I would take, and I'll show you why in a moment. We continue to fall. We do have a pullback here. Now, this would be an entry zone area of supply. Now on this occasion, we can see using a set and forget entry, we would have a losing trade. So you could have an entry here, targeting this low, stop above the high, and you can see this would have been a losing trade. Now, what we have to look at is that at this point, what do we have right above this high? Same as we do here. We have right above this high an area of imbalance. So what that tells me is that we could potentially run this high to go into the imbalance above. There's a way that we can look at understanding this before it happens by looking at the imbalance levels. Now, what I suggest doing is going and watching the playlist on imbalances. There's some great tips in there to understand imbalances, and there's also the understanding of liquidity, why we could run highs and swing lows and swing highs. So understanding the imbalances, liquidity, and market structure all comes together with supply and demand. So make sure you watch those playlists. And we can also identify here that when we do sweep through this high, we then break structure. So all we're doing here is after we broke through this area, this is actually a breakout imbalance zone. And just for this video, I'll quickly draw this out where price came into. Now, it's unfortunate if you were just using an area of an entry on set and forget, you would have a losing trade. But if you'd have used a confirmation entry going down to a lower time frame here, there was in fact an entry off this spike up for a sell to this low. And that's how you increase your risk to rewards. That's how you get better as a trader by understanding the confirmation entry. So at this point, we've broken structure again. We can mark out this last buy to sell move. Okay, the market does come into it. We do push down, we make a higher low, and we remove the zone. So there's a losing trade. We reverse structure. There it is. We break out right there. Okay, so when we see this, our last sell to buy move is this move here in the market. Now that's already been tested into on this candle when we pushed up. That tells me that this candle here is likely to be the next zone to be respected. Understanding that we already pushed into this zone and we broke structure internally, continue to move up. This origin zone, I'm not expecting price to want to come back. We come very close, but we didn't come back into it. So then we break structure again, head to the upside. What does that leave? That leaves this as a sell zone we can mark out. Now you can see price holds there. And again, we can refine that zone to the last bearish candle. Price comes in and we push up. So that's a good zone that we could look to take a long. We can take a long off this pullback into the zone, into this area. So we just actually drag that across. So when we see this push out, we then look for that long, and it should have been marked there, sorry. And we're targeting this high. Why this high? Because that's now the week high where we see the market runs. So you can see the market pulls back in. It's over 3-to-1 risk to reward, a good trade to take. And we're just following the sequence here of a break structure, pullback, continuation. Or we're following there for entry. Again, that's a good trade. So we had a losing trade over here. Potentially, okay, we had another losing trade again. We used this zone, which got broken through. And then we have a nice winning trade. And again, you could have used this zone, but it's quite a big zone and it wasn't the origin. So this is our next entry. We then break structure again. Where does that leave our new zone? Okay, we have a last sell to buy move zone here. Price doesn't come back to it, okay? So then we see the market breaks out again. Now we do have on the way up here a rally base rally zone. Again, you can watch the videos on those later in this series, this playlist. This is a entry area. You could take a trade if you wish off these zones, but I prefer to look for what I call that confirmation out of these zones, and I'll be looking to target this high. That's all I'll be doing here. Now, this isn't big enough for a set and forget, so definitely I want to be going down to lower time frames to check that. See, we have a good entry. We also have a nice area of imbalance there the market can come back into for a reversal. So again, that we break structure. Our last sell to buy move is down here. That's already been tested by that candle. So we can look at the next one. Again, that was tested on the way out. So at the moment you would look for that, price never came back to it. Okay, so came back into the areas of imbalance. And you continue doing the same thing. Okay, we have another breakout to the upside. There's my last sell to buy move. That would be my entry. Off this area, we're going with the trend, targeting the week high. Okay, and the market's just under 2, probably just a little bit smaller, to like 2.5. Okay, risk to reward there. Still a good trade. Now again, you could look to increase that if you look to left full swing highs, but I would stick with a simple strategy of entry, targeting the previous high. So we break out again. Last sell to buy move is in fact this move here. Now you can refine that if you wish to the last candle, but we do come in, we don't run the high, it's a losing trade. Now, is there a way to determine that this is going to happen? Not all the time, but we can look at what we call the internal structure here. We broke this internal structure to the downside. The market came down, we continued to break to the downside and then took out the zone. So you see, using internal structures and those lower time frames will stop you taking losing trades. We're not even gone into that yet. But if you're using just the single time frame with the set and forget, this is how you look at doing it. Now again, on the internal area, we do have these areas being created. We pull back in, we look to target the swing low. Okay, we break structure again. So you can see how if we just take this one across, what got taken out, this acted and worked well. We then, when we broke structure, we kind of have this as a full zone, but I'll probably refine it to this last bullish candle. We don't come back to it anyway, but that would have been the zone, the full zone. So we're going now with that internal structure. We have broken this swing here, but we're going with that internal structure. You can see we have another last buy to sell move. And as the market would have been going for this low. So we had an entry here. Okay, we had a small one there. Probably wouldn't have looked at that the way the market was moving though. And this would have been how I would have taken a trade off that zone, targeting this low. Okay, that's what I look for there. But I want at least a 2-to-1 risk to reward. If I don't get a 2-to-1 risk to reward, I won't take it. But then it's where we can go down to lower time frames. Okay, looking for those entries. So again, look, this is the last buy to sell move here. And you could refine it to the last bullish candle, even the open of the candle if you wish. But again, this would have been a losing trade. But there was no risk to reward there. You can see how there's nothing there at all. Not using this type of strategy. So this type of entry strategy is how you can quickly just manage trades. So we can identify we do push up. We create a rally-based rally. We swing high there, broken. But if you're looking at that internal structure now, we break out there. That does leave this full sell to buy move. Okay, very big zone there. Not a zone I really want to look at. And you see this is all being tested. So we'll be using it. So the market pushes up here. We've broken this structure. That's where we start getting the current price. Okay. So we then have really, this is a swing move down, swing move up, internal structure. There is a last move there we could draw. The market pushes down. Very internal area there. Okay. But if we're looking at a swing move, we do push up. Okay. This will be your breakout area right there. So we push up, pull back, push up, understanding that internal structure there. So when we do pull back, what we see here is this area of imbalance holding price. Now, this is what we call that sweep, which you'll find more in that other playlist going through liquidity in the market. We do break structure again. This swing low. Our last area we would draw out is this move here. That's our last buy to sell move. So you could take an entry off there if you wish on the pullback. Now that means I would be targeting this low here. Not really a big enough risk to reward for me again. So the point this breaks out, we do have that area just to the left, but it's not an area either that I'd look to trade from. The main reason is we break this structure here. Does look okay. Okay, but then we still haven't come off this area of supply. It's a fresh zone. And this is creating what I class the area of liquidity. This is a trend line area of liquidity where the market's going to want to push up and run. We have no liquidity in between this move back. So we create this breakout, which then does leave this last area here we could draw, okay, of supply. The market pushes down. This is our zone. We didn't break out until here. So this would be the low. And again, look, you could look to short this zone, stop above the high, target this low. That's a good trade over 2 to 1. That's another winning trade. We broke structure again. Now, again, this is your last buy to sell move here. Now, there's an entry. You could have caught it. Okay. But we've also got to think at this point with reverse structure. So like I said before, we wouldn't take this entry after we saw the reversal of main swing structure here. That's what you got to take into account. So that's how we quickly go through the chart, understanding that strategy of applying the set and forget with a Forex supply and demand entry strategy. Now, current price, we'll get back to what we said earlier on in the video. Would you be taking a buy here? So did you put that comment in? Did you say yes or do you say no? Let's now look at what's really happening here. So first, we need to identify that we had another break of structure. That did leave this area of demand. That demand has been broken. What breaks demand? It's when we leave an area of supply. So we could look at first, this low was broken here. That did leave this as an area of supply. Market pulled back into supply and we dropped out. And we did what? We broke structure again. Yeah, we're going to come into an area of demand and we're going to see a bullish move up here. And yes, we could continue up from here, okay, and break this high. Then continue on with the trend. That is absolutely possible. But with structures, we now have this as a next area of supply. So what we need to see is that the market wants to continue to push lower. Now, what we need for that is liquidity. And this is something that you need to really learn. As we have here an area of, mark it out just quickly for you, area of imbalance. Okay, what we need to see is liquidity inside that. Now we have a swing high created here within this move up. So if we saw push up here to the 50% of the imbalance and a close back down, then I expect to see a continuation lower. If we just continue to run up and run through this imbalance, then we'll break this high, and what we'll see is we'll see a continuation to the upside. That is how we understand liquidity. Now, what we can also do here is we could push up, okay, pull back, one final push up, and then drop away. And we start engineering our own liquidity as we make that pullback. On the way back up here, we have no liquidity, okay? This is engineered liquidity, if it works. Again, that's what it is when we continue to pull back. When we pull back here in this first demand, we failed to go into this demand. We filled this imbalance. This is our engineered liquidity after we broke out and we pulled back. Now the market could be continue up higher here, okay, and we could push through. But we need to see what happens as we fill this imbalance. But I hope down below you left your comment, okay, and you said yes or no. And you stick with that. If you believe this was going to be a sell, then where would you take your sell? Well, for this to be a good sell, we can refine it to this move. We could sell off this level as long as we had that liquidity, or we could go down to lower time frame here and we look for the confirmation. We're able to target this low. So a 7 forget is not good enough. It's not over 2 to 1. So for any trades here, we will go down to lower time frames and we look for that reversal. So that's how we look at using the Forex supply and demand entry strategy. Now make sure you go watch the next video in this playlist series. And don't forget, if you want to learn more on the trading coaching experience and how you can get involved, then check the link coming up right now.